Wanted to tell you guys a story about this dope ass pit trader at one of the firms I worked at who made the sickest trade I've ever seen. Um, so there was a flash crash that happened, I want to say in like 2010. You guys can look it up. It's called the flash crash. And what happened is that the markets, like the S&P, everything just crashed 10% um intraday. Like it was just like a glitch basically. I think people still don't fully understand what happened there. It was just a normal trading day. And all of a sudden, the market just starts dipping. It's down 1 or 2%. That's good usually. So traders are like, "Oh, no way!" And they're making all these fat trades because there's a lot of opportunity when the markets start crashing. And then it crashes another 2 or 3%, and people start getting a little bit spooked. Like, yo, this is a really unusual move. Is this like some kind of front run? Like World War III is about to break out, and someone knows, but we don't. And then it just keeps crashing. It goes 7, 8% down 10%, and suddenly like the traders go from being very like frenetic and trying down trades to just being like frozen, like deer in headlights, because they're just like, what the hell's going on? I mean, that's a move you might not see in your whole career as a trader, like a 10% intraday move, especially off of no news. And so the pits are normally just like chaotic with people just like like yelling at brokers and stuff, making hand signals, arguing. But then on this in this moment, it just gets completely quiet, and all the pictures are just quiet and looking up at the wall. And if you ever see like pictures of exchange floors, the walls, there's really high ceilings, and the walls just have all these numbers on these boards, so you can see the price of all these different assets and commodities at the same time. And they're all just like, they're normally looking down at their pads because they all have these little tablets. They used to be papers back in the day, but they upgraded to tablets where they look at like trading, like in-house trading strategies and stuff that they're being sent from quants and developers upstairs in the offices. And instead of like looking down, they all just like look up and are staring at the walls, watching the S&P just crashing down 9%, down 10%. And everyone's quiet. And there's this the market makers aren't normally actively making markets to kind of give you an idea of where the options market is. And so they're basically, normally you have an idea of where the market is, but then in this case, the markets completely disappeared because all the traders were completely spooked. So they just stopped trading, and it was just quiet. And then our guy, let's call him Bubs, which rhymes with the nickname we used to give him. Our guy Bubs, he's like this chubby guy who smokes and drinks a lot, but he's like really good at mental math. That's how he got the job. And he sees this resting order out there, from when the market was like 6% higher, that no one traded. And no one traded it because the markets widened out a lot, and then the markets completely disappeared. So no one knew. It was completely opaque. No one knew where things were actually trading. And so he basically sees that order still resting out there. And normally traders will do pieces of these huge orders because they're too big for individual firms to trade. Market makers will do like 1/10 of the order, and then they'll do like, I'll do 100, so it'll be 1,000 line. They'll split it up, like 100, like the broker will point to different trading firms, like, okay, like DOW, Belvedere, they'll be like 100, they'll point to each firm and split up the order. And if let's say it was like 100 lot, or sorry, let's say this resting order was like 1,000 lot, Bubs basically prices the order in his head based on where he thinks the implied volatility should be, based on just his experience being a pit trader for a long time. And he decides that it's really mispriced and there's fat edge in the trade. So he just goes 1,000 and he just gets all of them. He takes the whole order down, and he gets in the broker's face. He goes like, 1,000, I'm doing all of them. And then and then the whole pit like tried to get in behind him, but he took the whole order. So they were like, oh, I want 100, and he was like, no, he took the whole order. And then from there he made the market. So people had the confidence to believe, okay, the real market is probably somewhere around there, since he just took down the whole 1,000 lot. And then when other orders started trickling in, they started trading in and around those values. So then the market started to show up again because it was completely opaque, and then the market like showed up, and then started to tighten around where he made that last trade with that resting order. And basically the point of the story is that this guy, when he took down that 1,000 lot order, he made $1 million in one trade. It might be the greatest trade anyone's ever made at the firm. And when he came upstairs at the end of the trading day from the pits to the offices, he was like Alexander the Great, like walking back after his after he defeated that guy, that Persian guy, I forgot his name. Like he had this like emperor's welcome. Like people were like, "Yo, wow, man, that's a sick trade. I can't believe you made that trade." And they all like bought him drinks for happy hour and stuff. And yeah, that's insane to think about, right? Like to make that much money in one trade. Um, yeah, I mean, he gets 20% of that as a bonus. So he made 200 grand in one trade. But the thing is, like, you have to understand that no one else is doing that trade because it's scary. You don't know where the market is. It's completely opaque. The market was completely dark, and he made a trade in the dark. So he had a lot of good intuition and understanding of how the implied vol would probably behave in such a move, and he reasoned that it was mispriced by a lot. That resting order was mispriced by a lot at that point. So the reason that people didn't do it is because if he got that trade wrong, he could have lost $1 million for his firm instantly, and that's scary. And a lot of people don't have the stomach to put on a trade like that, especially all 1,000 of them. So this dude had huge balls, man. That could have been his job, like in that moment, when he made that decision with impulse. Um, I mean, he was an experienced and respected pit trader, so most likely they would have just like yelled at him, and maybe they wouldn't have fired him, but he would have gotten no bonus that year. If that was a bad trade, and he lost $1 million. So yeah, it just gives you an idea of like the nature of the industry, like what it can be like. It's super dynamic, and a lot of people think pit trading is like a dying art, and it is in a way, but it's also at least in the options markets, they still have pit traders, and it's fun in its own way. It's a lot of mental math, and it's not as much computer stuff. It's way more like thinking about what's happening in the market in your head. So, all right, looks like I'm basically here. So, hope you enjoyed the story. See ya.